Let's talk about money laundering. According to the ACCA Code of Ethics, money laundering is defined as the process by which criminals attempt to conceal the true origin and ownership of the proceeds of their criminal activity, allowing them to maintain control over the proceeds and ultimately providing a legitimate cover for their sources of income. Now, what does this mean? That long definition simply means you've done something illegal and you're trying to hide the source of those illegal funds. So what do? You try to pretend like you didn't make money from those illegal means and you're trying to spend the money legitimately. And in terms of that definition, you don't need to cram the whole definition. You just need to remember certain keywords. The first keyword is hide. What are you trying to do? You're trying to hide criminal proceeds. Why are you trying to hide criminal proceeds? To provide a legitimate cover. So hide, criminal proceeds, and legitimate cover. Those are the three keywords in that definition. Now that's money laundering. Now, in terms of money laundering, there are different money laundering offenses out there. The first one is concealing or hiding criminal property, meaning if somebody has done something illegal, for instance, they've done drug trafficking, human trafficking, any other illegal thing, and they make money from it and they say, take, keep it for me. You are already guilty of money laundering by keeping it from them for them and hiding it from the authorities. So another example of a money laundering offense is hiding income that are subject to taxes. A lot of people do this all over the world where you have your income that you make, right? But you don't want it to be taxed. So what do? Maybe you convert it to crypto or you collect it in some financial services app so that the authorities would not know that this money has hit your bank account. So the IRS or the EFCC or the FIRS, whatever country you're in, do not see the money in your bank account. That process of hiding your money or not paying taxes is tax evasion. That's a crime, right? Now, that money you've saved and the process of hiding it from the authorities so they don't see that you're spending money that you should have paid as taxes, and that's money laundering. So you're guilty of two offenses right there. Another example of money laundering is when you see somebody that is under the criminal investigation of money laundering and they don't know, but you know, and you decide to tip them off. Now, this usually happens with professionals because professionals are privy to a lot of information that is not public. So, if they come to knowledge of somebody that is under investigation and they tell that person, hey, you're under investigation for money laundering, then that professional is also guilty of money laundering. It's known as tipping off. Okay. Another example of money laundering is for certain professionals like lawyers, accountants, auditors, where you are required to report suspicions. Even banks are required to report suspicions of money laundering, just suspicious transactions. Just report all your suspicions the way they are. That's the requirement of the law. And you don't do so, you're also guilty of money laundering in the event that that client is actually guilty of money laundering. So these are money laundering offenses, but it doesn't end there. There are actually three stages involved in money laundering. The first stage is the placement, the second stage is layering, and the last stage is integration. What is placement? Placement simply means you're placing your illegal funds into the legitimate system, into the financial system. This happens in various different ways by criminals. What some people do is they try to put in um, illegal proceeds via fictitious invoices. For instance, they set up a business and for that business they record invoices like, oh, they received money from customers, but they didn't receive money from customers. Those monies came through their trafficking business. So in those cases, we have placement. You're introducing the money. Now, if anybody goes into that business and looks at the invoice, all they need to do is confirm that invoice from one of the customers and they'll find out that no customer really exists. So what do? They go through the next step, which is layering. Layering involves taking the transactions through multiple different jurisdictions. You transfer it to the Cayman Islands, from the Cayman Islands to Switzerland, from Switzerland to the UK, from the UK to Canada, from the Canada to the US, and back to whatever country that the funds originated from. And those monies going through all those different countries will be in different forms. One might go as an investment, another one might go as a loan, another one might go as, oh, you're purchasing foreign assets. Whatever the case is, the money is still coming back to your home country And that's where the last stage occurs, which is called integration. Now, the money now looks like it's coming from a legitimate source, from a legitimate business, and you can spend it legitimately. So those are the three stages of money laundering. So how do you prevent money laundering as a company? Now, you can either prevent money laundering as a company, a consulting firm, or an audit firm, or you can prevent money laundering as a person, as an individual. So let's talk about the first one as a company. How do you prevent money laundering? The first thing is to appoint what we call an MLRO, a money laundering reporting officer. This fancy term is just what we use for one official that is responsible for taking in any suspected cases of money laundering, right? So it means that you just have somebody within the organization that is fully, solely responsible for money laundering, right? This person, depending on how exposed your business is to money laundering, you would look at, maybe employing a team or employing just one person or employing two people. By the time you employ somebody or officials responsible for this, you are in front of it already because all their job is to analyze suspected cases of money laundering, accept any report from anybody within the organization or outside the organization reporting in, and take those different information, process it, and report to the relevant authorities in whatever part of the world they're in. So that's the first thing to do as a company: appoint an officer responsible for analyzing and taking in information of suspected cases of money laundering. The next thing is KYC. KYC simply means know your client, or some call it customer due diligence. What does this mean? It means you don't just go into business with anybody as a company. You have to know who your customers are. If they're a company, you need to know their company address, you need to know information about the company, who set up the company, who are the major investors, what kind of business are they in, what's the source of their funds, right? You need to know all these different things. Now, if any one of you has ever filled a bank application form before, you would understand what KYC means, where they ask you a bunch of questions: your residential address, your date of birth, all those different types of information. That's KYC. They're getting to know you, they're getting to understand what kind of customer you are, they're getting to understand what kind of risks of money laundering that you can provide to them. So that's KYC. The next thing you do is you ensure that you've done your KYC. You have to then continually do KYC. For some companies, maybe every 3 years, they renew it because a customer's address might have changed. A customer's, if it's a company that is your customer, the business's shareholders might have changed over that time. So every 3 years, always renew it and keep those records, which is the next thing. Keep your records even 5 years after doing business with your customers. This is one way to prevent money laundering as a company. Another way to prevent money laundering as a company is to ensure you train your staff. Right? Training your staff is important because not everybody knows what money laundering is. I mean, you're watching this video, right? Maybe you didn't know some of the things about money laundering I'm saying in this video before now. And that's something important because in every single year, different sophisticated means or methods of money laundering, they come up. So, and as they come up, you need to develop ways to combat or ways to battle those different sophisticated means that come up as time goes by. So training your staff frequently is very important. Some train their staff monthly, some quarterly. It's about getting the right balance in whatever industry you're exposed to. For those in the financial industry, of course, you want to train your staff more frequently because that's where you see more cases of money laundering. Another thing to do is to establish systems and processes that sort of prevent money laundering. Put those systems and processes in place. If you see weird transactions, if you see transactions from unknown sources, have systems and processes that do an automatic reporting or automatic monitoring, which will save you manpower and time in identifying those things manually. And for consulting firms out there or auditors out there, you can simply put a clause in your engagement letter saying we don't support money laundering, and if we suspect cases of money laundering, we would report without notifying you. So that will make clients that are involved in money laundering a little bit more aware, and they might not want to use your services because you have that clause in your engagement letter. Now, as an individual, there are different ways you can also prevent money laundering. Number one, always be cautious of financial transactions as an individual. Somebody wants you to transfer money to an unknown foreign account for them. Says, "Oh, help me transfer this money." You need to be cautious of that financial transaction. Or somebody says, "Hey, do you have an account I can transfer money to?" And next thing they're wiring $1 million or $500,000 through your account, and they say, "Oh, just help me to transfer it to this other account which is in another foreign currency, you need to be careful about that. Those wire transfers could be from illegal sources. There are cases where you get an alert on your phone and immediately your accounts are frozen. Immediately there's an investigation already pending on your case. Your file is open just because you received money. Okay? So you need to be careful about financial transactions. Number two, you need to be careful about who you do business with. What's their source of funding? Right? If somebody is coming to you, maybe you're a small business owner or you're trying to sell a used item. All of us sell used items all the time. Now, if you have somebody like that and the person is saying, "Oh, I'm going to pay you in crypto," you need to be careful, right? The crypto might be from illegal sources or illegal means, such that when that money enters your account is going to be frozen, and next thing you're getting arrested and there's an investigation on your head. Because remember, one of the offenses of money laundering is actually when you, as a person, hold those funds, those criminal proceeds. You don't have to even spend it. As long as you hold them, you're already guilty of money laundering. Okay? And you then have to justify in a court of law whether you are aware or not that those proceeds came from criminal activities. Now, you need to understand that in different countries, there are different monitoring thresholds, for different several bodies across the world. For example, in the US, any transfer of 10,000 US dollars to any account is monitored. So they're going to look at where it came from, they're going to look at who it's going to, they look at the history, and they will understand whether those funds in any way is tied to criminal activity. So you need to be careful of funds that are 10K or above in the US. The number in Canada is 10K Canadian, so you need to be careful about that. The number in Nigeria is 5 million for individuals and 10 million for corporate bodies. Those thresholds are being monitored all the time by the several regulatory bodies in Nigeria. And in India is 1 million Indian rupees. So you need to be careful about these different monitoring thresholds, because if any amount you want to receive is beyond this threshold, you need to be sure that it's coming from legitimate sources before you end up in a dark room with somebody with a hat asking you uncomfortable questions. Now, I believe after watching this video, you understand what money laundering is and you know how to avoid money laundering either as an individual or as a business. If you have questions, you can drop it in the comment section below and I'll make sure to answer whatever question you have. If you want me to do any video on any topic for you that you find particularly difficult for those writing exams, you can also drop it in the comment section below, but I only respond to subscribers. Thank you guys for watching.